All right, everyone can hear. Okay, we shall start right now. Okay, this whole session is recorded, so in any case, you need to refer back to any things that we mentioned. You'll be able to do that. All right, and of course, for those who are first time using this, you'll be able to type your chat as well. So your chat, you can actually select the option to either send a message to everyone in this room, or you can send it to me. So later on, when we go through, when you have certain questions, you can type it into the chat, and then I'll be able to answer and look at your questions and answer them as well. Okay, so let's go over the usual thing that we do. Okay, so the first thing is I always look into the calendar. If you haven't looked into it, this week is actually the most active week in December. Right, basically after this week, you won't be able to have much more opportunity going into Christmas and the New Year for 2018. All right, but if you look at this week, hey, you realize that we are packed with a lot of central banks' decision and rate statement, right? Coming in on later, the closest one is actually your ECB, and then later on we have the FOMC later on Thursday, all right? And then after that, you have your SMB monetary policy statement, followed by your pound, all right, the BOE bank rate statement on the same day, as well as the ECB press conference on Thursday as well, right? And then of course Friday will be slightly less hectic in terms of the news, right? So Thursday for this week is really the core focus that you want to put yourself in, because we have FOMC. Then after that, going into the evening, we have the CHF, SMB, and then UK BOE as well as Euro all on the same day. Right. As for tomorrow, right, we do have some tier one data like your pound average earning index is actually the tier one data, followed by the US session. You do have core CPI. It's also a tier one data, right? But taking note that because the following day we have more important news like the FOMC's rate statement, right? Therefore, this tier one data might be less significant. Right. So having seen all this, the focus for this week is definitely almost the entire list or entire portfolio of your currency, including the CHF itself. Okay. So with that, I'll just bring you because we are near the end of the year. So after that, there's not much in terms of monetary policy statement that is coming in. Other than that, the following week will be your JPY, right? Pound, sorry, Japanese yen, and then after that, it will be your Christmas week, which we would strongly encourage you to also take that whole week off from trading, right? So basically, we are actually in the last 2 weeks for the year, for some active trades itself. Okay, so with that, right, I'll jump to the chart. Okay, so the first one that we're going to look into is of course your dollar index. Okay, I'll for this session for the webinar, I'll actually go through the whole list of currency, all right, meaning total about 26 plus some of the commodities that will give you about 29. All right, so some of them I'll put in more time to walk you through because we might see something that is potentially setting up. And for the others, if there's nothing much, I'll just go through and let you know, what I'm seeing. Right. So for this webinar, I'll focus on two time frame, mainly the daily time frame and the 4 hour time frame. Okay, and of course, if need to, for more details, I'll drop to the hourly time frame to walk you through more as well. Okay, so for dollar index, right, what I'm seeing is I think all of us are very familiar with this. This is the impulse. All right, potentially this is the first wave, this is the second wave, and this is the third wave, and we have seen the correction, okay, as potentially completing the fourth wave. Okay, but having seen that the second wave, all right, this is to share with you a little bit in terms of Elliott wave principles. We have this guide and state that if wave two is quick and simple, wave four is usually more complex and longer. Okay, so having said that, I do expect that wave four might not yet be completed, which means that I'm expecting potentially one, two, and maybe one more move to the upside, right? Or even a more complex structure, but basically I'm expecting the duration of wave 4 to be longer than the duration of wave 2, right? So that's the rule or the guides of alternation in wave theory. Okay, so having said that, my bias on the dollar index right now, okay, I'll clear my drawing. My bias on the dollar index right now is actually not very firm, which means that my conviction on the directional bias of dollar is not very strong. Okay, simply because we do see various possibility. One is this as 1, 2, and potentially one more move to the upside, breaking this top. Okay, so that is one possibility, which means that we'll be looking for upside potential this particular week. Okay, which means that potentially when the Fed decide to increase interest rate, which has almost about 90% probability, we do expect, with the increase of interest rate, the dollar index to strengthen. So this is one possibility. Okay, the other possibility that potentially can see is this is indeed the fourth wave, okay, which is completed, and we are seeing the fifth wave developing, which gives us this potential move to a downside. Right, so if this is what's gonna develop, we'll be looking for downside instead. Okay, so this is where from the daily time frame there is two possibility on the dollar index, depending on is this gonna happen or is this gonna happen. Right, so that is where I see the dollar index on the daily time frame. So if I go to the 4 hour, right, I'm actually seeing this. This here I do see a very clear tree move down. All right, and this here I do see a tree move up as well. All right, and I see this price action here as somewhat of a crawling up pattern, losing some form of momentum. As you can see, all right, we do have some form of divergence forming potentially. Okay, so this divergence here is very clear. Okay, this divergence here is not yet as clear as what was developed in the previous one. Okay, so that gives me the expectation that with this move here, right, somewhat like a small crawl, which when we go to 1 hour later, you see this crawl more clearly, right? I actually expect a down move at least for the short term, right? At least towards the 50%, okay, downside. Okay, so this will give us the idea on whether the dollar index is gonna correct itself down and then go up, or we are gonna expect the dollar index to go down, make a small correction, and make a further down move. Okay, so having said that, what I'll be expecting, right, or what I'll be looking out for, right, this week going into the FOMC rate statement is to catch this potential move, all right, this very short term down move, right? Then whether I would actually ride this entire move further down, okay, or I would take some profits out if it's going to happen as predicted, all right, and then I'll look for the upside if it's going to make a V shape over here, all right, which is one of the scenario that we talk about. Okay, so let me clear all of this. So what is this tag or the area that I'll be looking out for? Okay, because we do see this as 1, 2, 3. All right, so this is the third move up. I'm expecting a minimum 50% area retracement. Right, so I expect the dollar index to retrace somewhat towards the 93 to 93.3 to 93.1 area. All right, so this is where I will gonna shift my stop loss to break even. Okay, how am I gonna sell this? This is gonna be the waiting for it to break down, right? And then I'm gonna look for a breakout sell. Once price hit this area about 93.3, I'll actually shift my stop loss to break even. Okay, so whether is it gonna go further down or is it gonna stop here and reverse for another upside, okay, breaking this top, it doesn't matter because I have my trade at break even once it tagged this area. All right, so if I show you this a little bit in terms of labeling, let me go back up to the daily time frame. Okay, there are a few ways to look at it. Potentially, this can be your A, B, and then C. Okay, so this label, I would expect from here, it goes back up to form a C, all right, breaking this top. Okay, the other way of labeling, all right, would be this is the A, B, C. All right, and what I'm seeing over here is potentially the last move, which is potentially this is 1, 2, 3, 4, 5. All right, so there are two ways to look at the dollar index. That's why I say this 50 to 61.8 retracement will be crucial, whether we're going to see some support over here for one more move to the upside, or we're going to see price breaking this whole support area. and then we can see the 1, 2, 3, 4, 5 wave forming. All right, so this is the analysis for me on the dollar index. Okay, some additional technical analysis for you to guide is potentially you can have this trend line, okay, on the daily time frame. So if price break below this structural trend line, okay, we can potentially expect the 1, 2, 3, 4, 5 to form, which is 1, 2, 3, 4, 5. All right, so you can use this technical trend line to give you that confirmation on whether are we going to see this 5 wave down or are we going to see another wave to the upside. Okay, so this is something that you need to take note of depending on how price develop on perhaps the 4-hour once it dropped towards this 93.3 to 93.1. Okay, so when we have this analysis on the dollar index, basically euro dollar will be the inverse of it. Okay, so on the daily time frame, very similar. Okay, this is no doubt very clear. 1, 2, 3. All right, so this is again either this is a 4 or this is forming a 4. Okay, so it's basically just an inverse of your DXY. Okay, so having said that, if I'm looking to short term sell the dollar index, then of course my short term will be looking for at least an upside towards 50% of the euro dollar. Okay, so this can be a 1, 2, 3 completion, and then we expect another 1, 2, 3, 4, 5. Okay, very similar to the dollar index, or this can be a 1, 2, 3, breaking the low of this. Okay, so with that, going down to 4-hour. Okay, so for those who can't trade the dollar index directly, the next best alternative to look at is of course euro dollar, right? So again, very similarly, we have this S3 move. This whole portion here is forming like a crawl down. Okay, so what I'll expect is a minimum 50%. Okay, again, very similar to the dollar index. This is the crucial level to take note of. Whether are we gonna see more downside or more upside? Okay, again, this is where you can put in a structural trend line to assist you in giving you that confirmation. If price stalls around here, okay, we can expect one more move to the downside, breaking this low. Okay, if price doesn't stall there, but it does a correction like this along this trend line, then very high possibility you will see a break to the upside, and then that will give us as this is potentially your first move, second move, and then you can expect a 3, 4, 5 at the top. All right, so if it's gonna form a 3, 4, 5, what you can expect is it's gonna break this high. Okay, yeah? So this is the analysis on euro dollar and the dollar index. So this week with FOMC, definitely this tool will be one of the key focus to look out for. Okay, for pound dollar, all right, pound dollar is actually pretty clear. My bias remains unchanged. It's due towards the downside. This whole portion, right, in my analysis is due a correction. Okay, so as long as price maintain this whole development, which means a lot of overlap and is going very slowly to an upside, my bias is due towards the downside. I'm looking for short opportunity. Okay, so this whole structure here, once it breaks, okay, I would expect price to eventually reach all the way to this bottom and break it. Okay, so with this, the opportunity on the pound dollar is huge because if it decides to break over here, you actually can look out for up to somewhere close to that is about 1,260 pips potential. All right, from where if it is gonna break over here, all right, to the bottom, the previous low. Okay, so if price decides to break impulsively to the downside, I'm going to expect it to reach at least towards this bottom. Right? This, if I bring you to the weekly time frame, is actually the last wave to the downside. Okay, so this is a weekly very long 1, 2, and then I'll expect one more to the downside, and then eventually it needs to do a major retracement towards somewhere around the 50%. Okay, but as long as this is going to correct slowly, I'm going to expect one more move to the downside to break this low, and then we can expect one more move to the upside. All right, even if we bring in our FIB to measure the minimum expectation, all right, there's still a lot of opportunity. You can even expect it to go up to 9.5 0.46. All right, so this is huge. All right, so we don't expect it to drop all the way here first. A drop of 1,200 pips is more than enough for us to catch that move, at least in the trading perspective. Okay, but if you look at the 4 hour, it might not yet be ready for it to drop. Okay, so daily we're expecting it to go lower, but 4 hour is not yet showing sign. This here on 1 hour is a crawl pattern. All right, so let me show you on the 1 hour. Okay, it's not a sustainable down move. It needs to go back up first. All right, and having said that, going back to the 4 hour, okay, this is potentially 1, 2, 3. So let it do a correction towards a 50% and let price shows you what it's gonna do over here. Right? Once it gives us a V shape like this, okay, and a correction, it helps to confirm that yeah, we can look for a downside on pound dollar. Okay, so this one here needs to be a little bit patient because again we are looking at dollar index weakening. Right, so short term this can still go back up. All right, so pound dollar is not yet ready to short, but if you look at the daily, I'm not going to be interested in buying it. Okay, I'm going to be interested in selling it. All right, so this is my analysis on the pound dollar. I'm going to be interested in selling it, but be very patient on selling it. Okay, Aussie dollar. Okay, it has been falling, right? But you can see very nicely on the daily perspective. Okay, let me pull up my RSI as well. You can very clearly see we are looking at a divergence, all right? And this whole pattern here, you can see it's actually a ending diagonal or a crawl pattern. Okay, so once this is done, we do expect one more to the upside. All right, so with this, I'll keep my RSI. Okay, we saw that divergence. Okay, so what I'm seeing is this measurement as 1:1. All right, it has been hit. All right, so I'm expecting it to soon complete the ending diagonal and to see one more move to the upside. Okay, how am I going to look at this as 5? This is going to be 1, 2, 3, 4, 5. Okay, why do I start from here? It's because this is my first impulse. This is the correction. Okay, so this is gonna be your A. Okay, your first move. Then this is your B, which is a reset. Okay, so this is where this is your first move. 1, 2, 3, 4, 5. Okay, potentially it has completed. Right. If it's gonna go lower, this area is still valid. Okay, so this, as long as it's gonna continue crawling like that, the expectation and the analysis is still pointing up towards a short-term upside, somewhere around the 50% before we can see for more downside. All right, so this is daily, this is huge. But what I also want to highlight to you is this up here, this move up here, I don't expect it to go all the way towards the top. Simply because if you're looking at the daily structure perspective, okay, this price has actually break this daily trend structure. Okay, which means that you need to go to a weekly time frame to see what's happening. All right, and once you go over to weekly, you can actually see this very clearly. This is your weekly impulse. This here is a correction. And this correction has given us a 1, 2, 3. All right. So this move down here, this portion which we are seeing on the daily, is actually the potential start of a weekly downtrend. Okay. So going back to daily. Okay. So I'm expecting this short-term upside, and then you can look for a long-term sell from there. Okay. This long-term sell from here. Okay. So if I'm going to clear all this, putting in some FIP, okay, I'm going to expect around a 50% retracement towards the upside. All right. And then what I'm going to expect is okay, this is going to be the first wave, second wave, third wave. You can project it to go to 1618 and beyond. All right, simply because we now understand that on a weekly perspective, okay, this move here can be the start of a new downtrend on the weekly time frame. Okay, so we can expect something like this, right? But if you are trading, okay, you wouldn't want to technically aim all the way towards your fifth wave, because this portion here will give you enough profits, to at least take some profit off your trade, or take protect them, and then look for opportunity to enter at the end of wave 4. Okay, but this week short term, okay, because this is daily, so it might take the next year, right, the start of next year to do that 5-wave development, right? So for this week, okay, this move here is a potential short-term one, right? Again, aligned with the weakness of DXY that we first analyzed. All the major pairs are actually confluencing on that move. Okay, so that is for the Aussie dollar, short-term towards the upside. Okay, Aussie and Kiwi, they both are very similar. Alright, so again, I'll show you quickly on the weekly time frame what the Kiwi is doing. It's very similar to the Aussie. Okay, it has broken that weekly structure. This is the impulse. This is the correction on the weekly time frame. Okay, you can see price has break down impulsively. Right, so if this continue to correct near the trend line, you do expect at least one more big move to the downside. Okay, and this big move is on the weekly, so it's going to be huge. Now going on daily, okay, this move here on daily you can see is sharp. Okay, this whole correction is impulse, sharp up, sharp down, sharp up. All right, so again, once we see all this, we are expecting an expanding flat structure. All right, so if I put in my fib, my expanding flat structure, this is the area that I'll be looking out for. 123 to 1618, right, to complete the expanding flat structure. Okay, so if you are putting in more confluence on fib, on the retracement, you can see that you have a very nice 50 to 618 area there as well. Okay, so this area is actually 704 to 6980. Right, so this is a good area for traders who look for sell limit, right? Basically, you put pending limit orders. This will be area for you to look for short. Okay, for breakout trader, you need to be more patient because flat structure is something that is very difficult to trade. You need to wait for more confirmation, like a small impulse followed by a correction, and then you can trade the breakout of this correction over here. Right, so one, you catch the trade here, one, you catch the trade here. Okay, so depending on your plan, how you're going to engage and trade the New Zealand dollar. Okay, so this one here, does it has the potential to go all the way back up towards 50%? Potential as well, all right? So that's why I say trading the flat is very dangerous. So just take note of that. You might have the potential that this is 1, 2, 3. Okay, and then you expect a 50% retracement, which means your flat will not end here. It might give you as a more complex move towards the upside. Okay, so take note of the possibility and potential of how this can develop as well. Okay, of course, the safest way to trade this is, of course, the 50 to 618 area. Okay, and then, of course, put your stops above here. Okay, but you need to also take note that you'll be shorting the New Zealand dollar, which means that you need to be paying a swap fee on that. Right, so not the ideal case of doing it. Okay, but there are some ways that you can look into trading it. For me, I'll be waiting for this to complete, wait for a short impulse and a correction, then I'll start looking for more downside. Okay, so as for now, I won't be looking for the New Zealand dollar for trade. Okay, so just sharing you that possibility that we do expect short-term upside. Okay, dollar Canadian. Okay, this is interesting as well. All right, we do see a very strong down move followed by a pretty strong up move. Again, V shape. And right now, price is doing a consolidation over here. Okay, this is again on daily. So what we expect is a minimum 3 move. So we expect once this consolidation is complete, we expect one more move to the upside, breaking this top. Okay, to complete our 3 move expectation. So have this correction been completed? All right, I'll bring you to the 4 hour to look at it. Okay, few ways you can look at it. This is the end of the impulse. So you have 1, 2, 3. Okay, so this has break the top, break the bottom, and if you put in your fib, you do see that it has meet the expectation of 1:1 as well. Okay, it has met the expectation over here. So potentially this can be your completed tree move A, B, C. And this is your first strong impulse followed by a correction. Okay, and then you can start to look for more upside. That is possible. Alright, so if you see price give you a very nice correction, take the upside. Okay, so this correction here can be coming from the dollar correction, all right? The DXY short-term downside weakness giving you this. Okay, and then after that, perhaps FOMC will give you a strong bullish push to the upside. All right, so potential setup on the dollar Canadian. So I'm going to look for upside for this week on the dollar CAD itself. All right, so dollar franc, pretty similar to actually dollar franc and euro dollar. They are almost in an inverse relationship. All right, and if I bring you back to the daily time frame to see what is developing, okay, this one here, my longer term bias is actually up because on the daily, you can see how price has broken this structure, okay, to the upside pretty strong, and then here you see three move respecting this previous structure, and we see a very sharp V shape. Okay, so long term I'm expecting more upside. Okay, but on 4 hour, how you can engage and trade this pair, right? You need to actually wait for more correction because this here is forming an inverted V. So it's not giving you a very strong conviction trade. Okay, so the best ideal scenario is you want to perhaps wait for a tree wave to form like that. All right, so this gives you an impulse. This gives you a 1, 2, 3 or ABC. Okay, and then look for that trade from there on. So as of now, we'll be patient waiting for it. Okay, and ideally this whole structure here is where price is gonna come back and test this trend line. Okay, so this is, you can also give yourself some Fibonacci confidence area somewhere between the 50 to 618 area. It will be a good opportunity to look for long, right? This is assuming that price come down correctively, not impulsively. All right, if price come down impulsively, I will not be looking at it over here anyway. Okay, but long term dollar franc, I'm looking for upside. On dollar yen, right, very similar, is also upside. We have see this as 1, 2, 3. Okay, so this has break the bottom, so this has potentially be your A, B, and this is your C. Right, so now right now what I'm seeing is this is forming a very strong V shape on a daily time frame, which means that on 4 hour, okay, let me clear my drawing, which means that on 4 hour, this can potentially be a completed correction. Okay, and we are seeing a 1, 2, 3 right now. Okay, in terms of setup for this week, nothing clear because this correction, this portion that I drew on circle is very, very small. Okay, so I will be very patient and give it more time to develop before I want to look for setup. Okay, so very quickly, dollar yen, no trade for this week for me. Okay, but if you ask me in terms of macro perspective, very long term, what is my outlook on the dollar yen going into next year, the entire outlook? Refer back to the meetup that we talk about global deleveraging. Okay, that is where I mentioned about how the Japanese yen can be a potential catalyst for the next financial crisis. Right, so when that happens, the yen will actually weaken significantly, and that will push our dollar yen all the way to the upside. Okay, euro yen. Quick look on this. Actually, nothing much. Okay, we are in a very nice sideways consolidation. Okay, which means that for those of you who are trading the M&W 88.6, you should get a very nice pattern forming all across this whole duration. Right, so maybe I'll just point out some potential forming that you can look out for. Right, this is the very bottom. You can see this is a 1, 2, 3, 4. All right, and this is of course your 50% area, so you look for the 88.6. Right, so let me put in the fib for you. The 88.6, okay, somewhere around here. that is where you can potentially look for a long trade. Okay, so let me just draw this in for you as well. All right, so if you are looking at this trade, okay, of course your very conservative target would be based on this whole move. The first target is 38.2, second target 618, and then your stop loss will be your previous low, right? If you're using FIT as a guidance of a stop loss, you can use your 113, right? Lester do use the 1.1 as well, 1.1, which is technically 10%. Okay, 10% more from your entire move, right? Because 100% plus another 10 is 10%, right? So for me, the safer one is actually 113, right? But you can actually put at 1.1 also to increase your risk to reward, all right? So this trade, first target gives you about 1.33. If you aim for second target, it gives you 2.2. Okay, so this is a very good example on Euro Yen. When you see price doing sideways consolidation, that's where you see a lot of M and W, right? And why am I looking for a M shape instead of a W? Is because the impulse, this immediate impulse is to upside, this upside impulse, this upside impulse, right? So my bias is of course upside. All right, so just sharing with you this. I personally do not actively trade the MNW 886, but this is one opportunity that you can look out for it. Okay, pound yen. Pound yen is very interesting over here. All right, I'll show you on the daily first. Okay, this is no doubt an impulse upside, and then we see 1, 2, 3. Right, this move never break here. Right, so this is where I expect this to be 1. This is 1, 2, 3. Okay, breaking the top, which gives you a potential expanding flat. All right, so let me redraw it. This is the first impulse. Okay, so we are currently in a correction, right? Now, this move here, let me draw in some lines. This move here never really break this. Okay, so this brings me, and of course, this top here broke this top. Okay, so one way to look at this whole structure is this. This becomes an A, this becomes a B, and then we expect a C to break this, which gives us an expanding 1, 2, 3, expanding flat. Okay, so of course, if this is the analysis, I'll be looking for this short. Right, then this is where I'll get an expanding flat that looks like that. Okay, before another potential up move on the pound yen. Right, so potentially you can look for this to form. Right, the other way to look at it, all right, so I'll erase this. The other way to look at it is this is 1, 2, 3. Okay, which means that this never break the previous low. It becomes a running flat. All right, so this becomes A, B, C. Okay, and of course, then this becomes the first impulse. All right, so how do I know which is likely to happen? I'm actually more towards the first scenario because I do see a very huge divergence forming over here. All right, that lead me to believe that this has more potential of dropping down instead of going higher. Okay, so I'm expecting it to drop lower simply because of this huge divergence, and therefore I'm expecting an expanding flat instead of a running flat over here. All right, so with that, I'll be looking for short opportunity on the pound yen. Okay, going to the 4-hour, there's not yet a short opportunity forming. Okay, but if price starts to do a slow correction, then I would have at least a 1, 2, 3. Okay, so whether this is gonna give you another expanding flat, you can see this is an impulse, then this is potentially your A, B, C. It doesn't really matter because if this gives us a correction, when I take this short here, okay, it either give me this potential profit or it's gonna give me this potential profit. Either way, I'll be very happy with that. All right, so right now what I would like to wait for is this to correct itself like that. All right, and then this is potentially can give me as an expanding flat ABC like this. right? So I'll be looking for this move down here for this particular week. Okay, this week itself, it might do this consolidation, all right? So I'll be expecting this perhaps next week itself. Okay, that is pound dollar. Sorry, pound yen. Right, Aussie yen. Right, you can see it didn't go as this, but it dropped prematurely. Okay, so this one here with this analysis, right? Again, Aussie yen, New Zealand yen is very similar to the whole idea on the Australian dollar and New Zealand dollar. Okay, if you're looking at weekly, we are now breaking the structure. Okay, so if I bring you back to the daily, if price continue to correct here, okay, we might potentially see a long-term downside on Aussie yen. Okay, potentially this can be the top and it's gonna form a potential 5-wave down, right? So this can potentially form like that. Alright, so of course that's where I'm gonna bring in some FIB to give us some guidance. Alright, you can see this one here never really tagged the 1618. Alright, so with that, alright, the rule is I wouldn't put this as 5-wave first, but I will expect it as a 3 move. Okay, so I'll expect this as 1, 2, 3, perhaps come up towards the 50% area. Alright, then this becomes my first move. And then this is second, and then I expect another third. Right, so the labeling you realize doesn't change the bias itself. I'm still looking for downside on this whole structure. Right, on a 4-hour, okay, this can potentially form a very nice ABC. Okay. Okay, so that's the area that you can look out for. 86.5 to 86.98, which is somewhere around 87 even level. Alright, that might confluence with your very nice 50 to 618 area as well. There we go. Okay, so it confluences nicely with that region, right? And then of course, simply based on some basic support and resistance, you can see how those level confluence nicely each other. Okay, so once price tag this area, it will be interesting to look for a short opportunity for the longer term. Right, so you realize that these few pairs, these few setups that I'm sharing, some of them actually includes longer term. Simply because if you are trading at the end of the year, you might potentially look to hold your trade all the way towards 2018. All right, so it might be interesting to actually consider some long term trades going into 2018. Okay, New Zealand yen. All right, you can see this is the 1, 2, 3. Okay, in terms of FIB, it has also meet that expectation, and right now you are gonna expect some form of a deeper retracement to the upside, somewhere towards 50% to 618. All right, so expect price to continue forming like that towards this area, and then on a higher time frame, this is where we're gonna take a look what's gonna happen for the New Zealand yen. Okay, slightly different from the Australia yen. Okay, you can see that we are seeing this as an impulse up, and then this is where we are seeing a correction. Alright, so once this correction is done, we are gonna expect one more long-term upside on this. Okay, take note that this low didn't break this low. Right, so what it means is potentially this is gonna be your 1, and then this is gonna be your 1, 2, 3, okay, as a B, breaking the previous top. This becomes an A, and you can expect one more move to the downside to be a C, and then after that your long-term upside of this equal length. All right, so you can expect this somewhere here. So this is a very long term, this is a weekly analysis on the New Zealand yen, right? But this gives you that perspective that you can look for this trade here potentially. It means the upside. So if I go to 4-hour, okay, we are currently at the end of an impulse move. Okay, wait for a correction. Look for the upside. Okay, so this is looking at fractal nature, right? Understanding the multi-time frame perspective of a market, give you the bias of a conviction in terms of whether you want to look for upside or downside. Okay, so this one here, this week, wait for correction. Nothing much that you can take note of in terms of trading. Okay, Canadian yen on daily. Okay, this is forming a very nice correction. Okay, this move here is where I think the BOC, there's some major news that is released. I wasn't active on that week, so totally miss it. But if you look at this, this is a very nice three move structure followed by a strong impulse to the upside. Okay, so on daily perspective, this whole move is definitely a correction. So long term upside. Okay, but if you go to 4 hour, okay, we do not get that buy setup yet because we have this impulse and this potentially looks like a correction. Okay, so we want to have 3 move expectation in the market. So when we get a 1 move down strongly like that, we expect another move towards the downside first, then only look for the upside. Right, so potentially this can be a 1, 2, 3. Right, this is a reset. This is a 1, 2, 3. So it breaks this flow, and then you can expect and look for the upside potential on a bigger perspective. Okay, so how is this gonna be in terms of labeling? I'm gonna use WXY. This is gonna be a W, this is gonna be X, this is potentially Y. Okay, and within the W, you actually get 3 move as well. 1, 2, 3. And within this W, you get 1, 2, 3. Right, so you get actually 3 move here, a reset, this becomes your 1 big move, and then 3 move here, this becomes a 1 big move, and then it completes a 1, 2, 3. Okay, so with this understanding, that's where you can also use FIB to guide you. Right, so if this is your 1 big move, and then this is your X, okay, so let me put that in. 1 big move, X, and then Y, you'll be expecting it to go somewhere towards the area. Alright, so you can see potentially you can take a short trade target towards this, and then once it tags this area between 85, around 86 to 85 area, okay, that's a 100 pips range because this is actually a very huge perspective. It's on the daily time frame. Alright, 4 hour I zoom out a lot, so these are the daily time frame. Okay, then this is where you can look for the opportunity to take a short. Right, so this week, Canadian yen can potentially look for a short setup. Alright, so look for the breakout if you are a breakout trader. Euro pound, okay, daily perspective, you can see this is consolidating. Okay, but this consolidation is breaking the previous low. It's making low, low, low. Okay, which means that potentially this can form a 1, 2 as an expanding flat, and then 3. Right, so this can potentially form like this, but if I show you on 4 hour, you basically get nothing much that in terms of trading setup. This is definitely a V shape. Wait for it. Okay, so Euro pound, nothing much you can trade for this particular week. All right, even on the daily time frame, is not the clearest pair to look out for, right? But we do expect a long term down and a shorter term upside. Okay, Euro Aussie. Okay, on the daily, this is an unsustainable up move. It needs to do some form of correction if it wants to go up further healthily. Okay, if it doesn't do a healthy correction, you can expect it to drop strong. Okay, so give me, I'll bring you to the weekly to show you what we are looking at. Okay, this one here is definitely a correction. Okay, this one here is an impulse. Okay, so if weekly giving you this whole perspective, this is what I'm actually seeing. Impulse, this whole portion is correcting. Yeah, so this is an impulse. This is a 1, 2, 3, breaking the previous low, breaking the previous top. So this becomes your expanding A, B, C. Okay, so this potentially with this analysis on weekly, I'm gonna look at this as 1, Alright, so I'm going to expect this as a correction, not a reversal. Okay, so going back to daily, with that understanding, I would then expect this to give me a correction, to give me a more sustainable up move. Okay, so in other words, it's not yet ready to buy, but I will be looking for a long-term sell. Right, so in fact, if you go over the 4 hour, you don't really get a sell setup as of now. The bias is still, this is an impulse, this is currently forming a correction, which is very complex. So the ideal is to stay away from Euro Aussie. All right, look at this, our analysis on Euro Kiwi. It hits perfectly. Right, so now with this understanding, this whole structure here is forming a crawl. Okay, if I'm not wrong, there will be a divergence. Okay, you can see pretty clear this is moving higher, and RSI here is giving us a very clear divergence. Okay, so what this means is that do not look for upside as of now. You can look for a potential counter trend. Okay, there are two ways to look at this trade. One, short term towards this area. Okay, once it breaks, it can go lower. Okay, in fact, I'm actually expecting this to potentially look all the way to 50%. Okay, because this is 1, 2, 3 move. Okay, this is where we get an ending diagonal. So it completes a 3 move. I expect a deeper correction over here, 50 to 61.8. The area is 1.60 to 1.566. Okay, so this is my long-term Euro Kiwi trade analysis. This is on the daily. Okay, so if you look at 4 hour, okay, we are looking at impulse move forming. Okay, we are looking at impulse move forming. So once I get a correction, okay, I'll be looking for that downside. I'll look for that sell. Right. This is the structure to look at for daily perspective. This is the level to look at in terms of potential long-term take profit. Okay, so if I'm gonna measure that move, it can give us close to 900 pips. All right, so that is a pretty decent move going into it. If you short the Euro Kiwi, you are basically buying the New Zealand. Right, so you'll be most likely holding on to a positive swap. So this gives me the bias and comfort level to actually hold on to this trade as long as I can to capture the profits itself. Right, so this is my analysis on the Euro Kiwi. Right, on 4 hour this week, wait for the correction. Maybe next week you can take a short trade down there. Right, EuroCAD. Looking at this perspective, daily. Again, this whole move here, a lot of overlap. Okay, you can see. So this whole part is basically forming a correction. Okay, this is a very clear impulse up, and then we see a correction. Okay, so this correction here, if you focus at this last move to the upside, you see a lot of overlap as well, right? In terms of RSI, there's not much in terms of a mini divergence over here. Okay, but if I take this top here, there's a divergence that's pretty clear. Okay, so this potentially can mean that I'm expecting this is 1 as A, this is B, and then potentially this is C, breaking this low, forming an expanding flat like this. Alright, and of course this is the impulse, so we expect one more move to the upside after this big down move. Right, so short term we can look for this to the downside. Okay, 4 hour, we are potentially getting a nice setup. Right, but this setup, I wouldn't trade the first break, okay? Because if you remember the topic about expectation, this is one. I would expect one more move to the upside. So this gives me a complete ABC. Right, then I'll take that trade. Okay, of course, this C, I won't expect it to go so high. I want it to go slow. All right, so once it hits the ABC, then I'll start to look for that downside. Right, for breakout, something like this. Right, so again, this week on EuroCAD, you potentially won't get much because you need to wait for this. Right, so no active setup to monitor for EuroCAD as of this week. Okay, the pound. The pound has been pretty volatile this few days simply because of Brexit news and everything like this, right? But it didn't change the bias. Look at this. It's not a sustainable up move, right? So daily, the pound pairs is very similar to the pound dollar analysis. This whole portion here is a correction. Okay, the impulse you can clearly see with Brexit is still there. Okay, so I still expect one more move to the downside, right? And this setup over here is forming pretty nicely because we can see that once the structure is broken, we can see more downside. Okay, divergence has been forming, so it's a very nice setup to look out for in terms of the pound Aussie. Okay, so in terms of 4 hour, we need to wait for a correction because this is an impulse. Wait for a correction, look for that downside trade. Okay, so this week again is the waiting for a correction setup. Okay, so nothing much for you to actively monitor, but expect a correction this week and then look for the downside. When the downside happen, it's gonna be huge, so don't miss that. Okay, it can happen this year or it can happen next year. All right, so just take note of that. Very similar to pound Aussie. Okay, pound Kiwi is the similar analysis. This is the Brexit impulse. You get 1, 2, 3. Okay, so this is where again this is not a sustainable up move. It needs to do a correction or potentially an impulse reversal. Okay, so for the pound, I actually expect an impulse down move. All right, this here is a very steep structure. Okay, you have very clear divergence as well. Okay, so very similar setup with pound Aussie. This week you'll be waiting for this. Okay, if it gives you this, look for that downside. Okay, pretty clear setup on the pound Aussie and pound Kiwi. Okay, so pound Canadian didn't happen after this crawl. It didn't really drop. It continued to shoot up. Okay, so in terms of this, does it change the analysis? All right. If you look at daily, it's still the same bias on all pound downside long term. Okay, this move here needs to correct itself. Even on the daily, it looks the same. It needs to correct itself. Okay, so this one here, you need to pay attention. This low here didn't break the previous low. Okay, so it means that this potentially can be your one. Sorry, this is the impulse. This can be potentially a 1, 2, 3 to the upside. It needs to break this. Okay, because this is the impulse down. All right, and this low wasn't broken. Okay, so you expect this to be broken in terms of 3 move. A, B, C. All right, so this move you expect it to break it, but of course it can do a retracement and then go higher to break this top. Okay, this move here is not sustainable, which means that in order for it to go higher, there's a higher likelihood of it doing a 50% retracement and then go up. Okay, so if you pull in daily, there's no divergence forming. Okay, 4 hour you do get divergence, right? In fact, okay, sorry, this is not a divergence yet, right? So that's why I feel that in terms of these 3 crosses of pound Aussie, pound Kiwi, pound CAD, long term wise, pound CAD can still go up higher. Okay, but pound Aussie and pound Kiwi we are ready to drop. Right, so this is where the Canadian currencies will actually come into play. Right, where I shared with you earlier in terms of dollar CAD. Right, so dollar CAD. So this is the one that when the dollar CAD goes up, okay, the CAD weakens, then your euro CAD, your pound CAD will also go up. All right, last 3 potential currencies. All right, so this is Aussie, Kiwi. Okay, we initially expected this to come as a correction and go up, right? But it dropped further down as an impulse move. Okay, so does it change the overall structure? Okay, on the daily, okay, let me zoom out to a weekly to show you. Okay, the analysis is this. This is the recent low. This is the impulse move. This whole portion that you're seeing is actually a correction. Okay, so with this is a potential 1, 2, 3. Okay, so this is the next recent low. Okay, so you can see there's impulse, correction, impulse, impulse. So this is a V shape followed by next impulse. Okay, so my bias as of now is still expecting that this is an ABC. It has completed. Okay, and this is potentially the first move. This is ABC, the second wave, the third, fourth, and fifth to come. Okay, of course, this one here is developing. It potentially can be an internal 5-wave up. Right, so it can be an internal 5-wave up like that. Okay, so I need to change some drawing. Okay, so you can see this is a third wave for a bigger degree, which is the higher time frame. And then you can see internally you will have 5-wave up as well. Okay, so this is my expectation analysis on Aussie Kiwi. Alright, so with this expectation, okay, I'm actually looking at this. Right, so I'm going to clear everything. This is the recent low, right? So this is impulse, correction, impulse, impulse, and then followed by the next impulse up. Right? So as long as this low is intact and this doesn't break it strongly, okay, which means that it does a correction like that, I would still be holding on into a bullish bias. Okay, but having said that, go to 4 hour, we do not have a setup to buy now. Okay, in terms of fit, you do get the area below here. Okay, so I'll put some label. This is A, B, C. Okay, so you do get the area around the 1.0835 to 1.0764. Okay, but I won't be buying this because this is impulse down. Okay, so I would want to at least see an impulse up, a correction, then potentially that is where you get the setup to buy. Right, with this impulse down, there's no setup to buy. Okay, so Aussie Kiwi this week, nothing for us to look out for. Okay, the Kiwi is strengthening because this week we do have the newly appointed chairman for RBNZ. Right, so that is pretty positive for the New Zealand dollar. That's the reason why you see the New Zealand dollar rally. Okay, in terms of Aussie CAD, nothing changed. You can see this drawing done. It's still going down correctively. If I recall correctly, we do have a divergence as well. Okay, daily is a very small one, so perhaps it's clearer on the 4 hour. Okay, but this move down is what I like to see. If it continue to crawl like that, okay, we'll get a very nice up move. Okay, so when this break, right, this is where all your Canadian will weaken, and look out for that. Right, so that set up this move here, don't miss it. Right, it's gonna be huge. Okay, this is on daily. So if you look at sorry, I shouldn't go to weekly on the commodity currency because they will just be chopping around. That means it's just basically in a huge range up and down. Right? So this one here on daily you can see this is 1, 2, potentially this is your third one. It has break the low. Okay, so this one here it just needs some time. This forms a very nice crawl pattern and I expect it to break to the upside. Okay, 50% target can give you a very decent opportunity. Okay, close to your 1.0 even number, right? So that is where you get a strong resistance psychologically, right? It's a psychological number and you have a FIB of 50%. Okay, so once it keep a close watch on this. Once it's break, you can look for that trade. Again, buying Aussie Canadian, I'll be very happy to hold on to this trade as much profit as I can because it will be in a positive swap. Right? So similar on New Zealand, you can see the drawing done as well. Bring in the RSI, you can see divergence has been formed. Alright, so as long as this continue to crawl, it gives us a very nice setup to the upside. Alright, so all Canadian pairs are showing that setup. This is 1, 2, 3. Okay, so in terms of this crawl internally, you can start from here. This is a 1 move down. This is a reset. Okay, so 1, 2, 3, 4, 5. This is the one. Okay, look for setup to look for the buy up. Okay, so this is a few setup on all the currency pairs to look out for. Okay, now let's look at some of the commodities in terms of gold, silver, and oil. This is a very nice 3 move down. Alright, it's at the end of the impulse, so no trade, simply wait. Okay, so this is gold, no trade on gold. Silver, no trade on silver also. You can see this is an impulse, 1, 2, 3. Okay, but if you're looking at long-term opportunity, okay, if you're looking at long-term opportunity, this is a hidden divergence. Okay, we have 3 move down, hitting that 1:1 around that region. Okay, and let me bring in my right tool. This is 3 move, right? Okay, I would expect an equal move to the upside. Okay, so this is if you are looking at long-term opportunity, all right? I won't look at gold, simply because gold doesn't have the proper production value, all right? Silver has, right? So if you are looking at investment, okay, personally, I feel that silver would be a better investment than gold. Okay, so these are some few key reasons that you can potentially look for long-term investment in silver, right? When the commodity has a production value, if you put your stop loss at 0, you're literally safe, okay? Because it won't drop to 0. Right? When there's a production value of a commodity, the commodity will not drop to 0. Right? So in terms of investment, right, it's pretty safe to put a stop around this previous low, which is around 15. All right, and of course, in terms of upside opportunity, once it breaks this whole structure, you can look for a huge upside like this. 1, 2, 3. All right, so of course, this takes perhaps a longer term perspective. That means you must be willing to hold on to it. So if you're doing this as an investment, best not to trade it on your typical broker. Okay, because if you trade on a typical broker, it's a CFD counter. You need to pay a certain fee for overnight charges. Okay, so if you are looking for investment opportunity, this area will be a good opportunity to start accumulating silver. Okay, for a minimum upside, all right, that means your first target you can potentially aim for is around 18.63. Okay, just give you some perspective of measurement. Okay, that is a 17.7% upside. Right. So the reasons, the technical reasons to look at it is because we have a 1, 2, 3 move over here for the correction ABC. Okay, we do have a hidden divergence, which means that the price is forming a higher low, but your RSI is forming a lower low. We do have an oversold condition, right? And of course, understanding that this is silver as a production has a production value, so you won't have a drop all the way too low. Okay, so this is a few key reasons to look into silver for a long-term opportunity in investing. Okay, in terms of this, you can also look at why silver will be a better opportunity than gold, because we look at the gold silver ratio, you can see this is an impulse upside. Okay, which means that potentially, sorry, okay, correct myself. Okay, this is the upside, which means that gold will rally more than silver. Okay, so in the short term, silver would likely need to correct itself first more than gold. Okay, so this is where you need to take note. But if you look at the weekly perspective, this is an impulse down. Okay, this is a correction. Okay, so once this decides to break lower, which means that this correction is done and it starts to do this, that is where your silver will rally significantly more than your gold. Okay, so again, long-term opportunity. Okay, silver, long-term setup. Okay, this one over here. Okay, in fact, I believe that once the gold silver ratio breaks, right, the long term opportunity on silver is this green one. This one here, the 100%, which is the 80.63, is more of a medium term setup investment. All right, so your investment opportunity for silver, if you look for a longer horizon, can even go up to 22.68. Okay, so the upside from where it is right now, minimally you can already aim for about 40% upside potential. All right, so that is the gold and silver commodity. In terms of oil, okay, look at daily. Not much setup, all right. Basically, I'm seeing that this is currently going sideways. Not much in terms of opportunity to look for trade. Okay. In fact, if you are looking to buy, you need to be cautious. Yeah, all right. If you're looking for buy, you need to be cautious. It might give you a deeper and longer correction. Okay, because I'm expecting that this is the lowest low, the most recent low that is formed, right, in terms of the daily perspective. Then this is potentially giving you a 1, 2, 3, right? So this is the duration of wave two, all right. In terms of alternation, your wave four will be longer before it goes another wave up. Okay, there's no short setup, right? So the idea here is the bias is due to the upside, but you need to time your long entry better because expecting this to go sideways longer based on a certain rule and guideline in Elliott wave. All right, so this is 1, 2, 3, 4, 5. Right, wave 2 is pretty short in duration. Wave 4, you expect an alternation, you expect it to be longer. All right, so that is basically going through all the pairs that is in my watch list. Okay, so again, this week a lot of major news. All right, so hopefully this webinar will give you some insights into which currency pair you want to focus on, what setup you need to look at. Okay, and hopefully can help you to make some good trades along in this week. Okay, any questions from you guys or any particular pair you want me to walk through more in depth? Pound yen. On okay, for pound yen, give me a moment. Okay. Okay, so for pound yen, all right, I'll walk you more in depth. That means we'll start from daily, all right, and then I'll walk you through all the way to 4 hour, and potentially we can see if we can go to 1 hour for more analysis. Okay, so daily, okay, this is very clearly an impulse that I'm looking at. Okay, so this one here is a one move correction. Okay, so this move here, let me draw in the bottom. Right, so this bottom here, if you zoom in, all right, this price here actually never touch. All right, it's very close, right? So you can consider it touch or you can consider non-touch. Okay, so there's an importance of why is it not touch. Right, if it's not touch, it means that potentially this is one. Okay, this is not touch means this is one set. Okay, so I'm going to change color. if this low is not touched, the blue color is one set. Okay, which means that you now has green as one move, the blue as one move, right? This is one move, all right? And then you expect 3, so you have 1, 2, 3. So you expect it to break the bottom. Okay, so you expect the 3 green move. Okay, because this one here never tagged this, so this whole move up is considered as 1. Okay, so this one here, you realize that the top is actually broken. So once this top is broken, you can potentially expect an ABC expanding flat. Okay, so this is one way to look at it. All right, so I'll just put this aside. Okay, the other way to look at it is this. Okay, this is one move down. Okay, if this is touch, okay, then this potentially becomes your ABC completed. Okay, so if your ABC is completed, most of the time it will break it. Okay, but if you zoom in, this actually didn't break. I want to show you that if it touch or break it, this becomes your ABC. Then this here becomes a new impulse to the upside. All right, so there's two ways to look at it. Because this move, this portion here didn't touch the bottom, which is this case. Okay, so which is this case. So I'm gonna expect price to do this, forming an expanding flat. All right, so I'm expecting this to form expanding flat, which I'm gonna aim is this region. Okay, so around 146 to 143. Right, that will give me this as 1, 2, 3 to the upside. Okay, so this is my daily analysis. Now I go down to 4 hour. So this is my daily analysis. I go down to 4 hour. Okay, 4 hour, what I'm seeing is this is an impulse move. Right, and then I get a very strong down move, a very strong up move, and a pretty strong down move right now. Okay, this potentially gives me a break of the top, a break of heaven break of the bottom. Okay, so because it's break the top, again very similar, I'll draw it nicely. This is the impulse. Okay, this is the correction, right? So you have a bottom here, you have a top here. So this move up breaks the previous top, which potentially again give us the expectation of 1, 2, 3. Okay, so it gives us the expectation of an expanding flat. So again, I would expect this to potentially form A, B, C. Okay, and if I put in my measurement, it will be the 1618 to 123. Okay, so that is around 150. 149.5 to 148.3. Okay, so this is my expectation on the 4 hour. Okay, so downside also. So daily, expect this move. 4 hour, expect this move down. Alright, so do you have a setup as of now? Okay, which means can I trade it? Not yet. Why? Because if you look at 1 hour, okay, if you look at 1 hour, this move here, okay, doesn't look like it's ready to go down. Okay, this is in fact a potential 3 move down. So it might give you a retracement, and then it maybe starts to go down again. So this move here is not showing me that it's ready to go down yet. Okay, so I will be patient to wait for a setup, to look for this move down, to look for daily this move down. Okay, but on the 1 hour time frame, it's not giving me that setup yet, right? So what I want to see is if this gives a correction like that, okay, then yes, 1 hour is showing that I have a 1 move impulse down, a correction. I can expect another move down. Okay, and potentially this move down will be the start to break this low. Okay, so you can see on 1 hour, this is the perspective. Okay, so I need to wait for this. Then I can take the trade to the downside. Okay, so this is 1 hour. Okay, so you can see daily shows my analysis tells me that I expect a down move. Then I go to 4 hour, I also expect this down move, alright? But you see the expectation, this one here, I expect daily to break 147. Okay, 4 hour, I expect it to reach 149.5 first. Okay, so of course I'll put a conservative target now, 149.5. And then 1 hour tells me that I need to be patient in timing my short trade. Okay, so I want to wait for this, then I can take this down. Okay, so that is the idea in trading, the importance, all right, and the idea of trading, why you need to have multiple time frame. Okay, so if you decide to even drop to lower time frame, okay, this is what you're gonna see. If I'm not wrong, you should get a divergence. Right, you can see this is forming lower low. Your RSI is forming a divergence. Okay, so again, this part here is crawl down. Okay, so you expect maybe a short-term tree move to the upside, then down. Okay, so this tree move to the upside, okay, can be longer as well, which means that, okay, sorry, let me draw back in some of the drawing on 15-minute. Right, so this is 1, 2, 3, right? A crawl. Okay, so you can expect, you can see this is a 15-minute impulse, maybe a correction, an impulse up, a deeper correction, another tree move to the upside, then this itself, okay, I put in some oops. Okay, let me draw it nicely. This is about 50%. Right, and this is where you would form your correction. Okay, your ABC correction. ABC. All right, and then that is where you would now, when you see all this on 15-minute, right, you would now see a short impulse down and then a correction. Then you can expect more downside. Okay, so now you have higher time frame on daily downside, 4 hour downside. 1 hour is telling you not yet ready. 15-minute is telling you that you can expect this short-term up first, then downside. Okay, of course. So if you're an intraday trader, with this first impulse, every small correction you can look for upside. Every small correction you can look for upside, targeting 152.2. And then once you hit this area, you want to look for a potential reversal to the downside. Okay, so that is where you can see that if you're a short-term trader, you can be buying. If you're a long-term trader, you're looking for downside. Okay, so both sides makes money. Okay, it's your perspective of whether are you a short-term trader or are you a long-term trader. Okay, so this one I'll drop it into a Facebook group so you can take reference on yen. All right, pound yen. Okay, any other questions? All good. Okay, this webinar is recorded, so I'll also upload it once it's converted. All right. This format you need to convert it into another format that I'll upload on YouTube, and you all will be able to access this webinar again. Dollar Sing. Okay. Okay, I'll start from daily to see some perspective. Okay, so this will be my first time looking at Dollar Sing. Never really looked into it before. Okay, so I'll also share some thought process in terms of analyzing. Okay, so normally on daily, all right, I'll start from the very top, which is over here. Okay, so that is my very top, right? And of course, this is my most recent bottom. Okay, so based on this, I'll quickly use some analysis to see how many wave I can look into it. All right, of course, this I will label as 1, this is 2, and then this is potentially the third wave down. Okay, so with this, I'll put in my fib. okay, I can see that it has actually hit the region of 1 to 123. Okay, so potentially this gives me my 3 move completed. Okay, and therefore with this understanding, this potentially I'm expecting maybe, all right, a deeper correction, okay, which is somewhere around 50%. So I'll expect a correction towards this area on this understanding that this is a 3 move down, right? It has completed that FIP expectation. Okay, this is potentially starting a correction like that. This is 1, 2, 3, maybe a deeper correction 1, 2, 3, maybe something like this to give me my A, B, C. Okay, so this is my daily. I'm going to save this. This is my daily outlook. Okay, so if I go to 4 hour, okay, 4 hour dollar sync, okay, I'm seeing this right now as potential as impulse. This one here, I'm seeing a correction. Okay, so with this understanding, this impulse here is very long, this impulse is very short, right? Very high chance you actually see it as a 1618 extension. Let me just double check. We might not get that 1618. Okay, we do have it. Okay, just nice. So when I see this, my expectation is no longer a 3 move, but a 5 wave down. Okay, so this potentially a 4 and then expect a 5 wave down, right? Because I have a 1618. Okay, so this is the expectation I'm gonna get. So in terms of if this is gonna be 3, this is gonna be 4. Okay, it cannot touch this. It cannot go above 1. Alright, so this level here must be respected. Okay, so my 4 cannot go above that. Then if I put in more FIP, okay, my understanding is 5th wave will be this region. Okay, this is based on wave. Okay, if your 3rd wave is normal, which is 1618, which is normal, which means that 5th wave is likely gonna be extended. So I'm gonna use an extended target of potential all the way here. Okay, but of course the first target and the conservative one is just 61.8, which is 1.3358. Right, so I'm expecting this to form 1, 2, 3, 4, and then 5 down. Okay, this is on 4 hour. Okay, so expectation on dollar sync is this on 4 hour. Going to lower time frame of 1 hour. Okay, you can see a lot of chop, a lot of overlapping. Okay, this is what I'm seeing. So far this is showing you as an impulse up relative to what is forming here. This is an impulse up. Okay, so as of now, I'm seeing that this is my first correction. This is sideways. Okay, so I expect one more move to a downside, maybe towards 50% of this entire up move. All right, so I'm gonna expect here. Okay, so this one needs to go slightly lower. Okay, something like this. Okay, to be more conservative, you can don't use this low. Okay, you can use this most recent low. Then your target or your expectation will be slightly more conservative because you're going to expect only this 50% at 1.34 or close to 1.35. Okay, so for this example, okay, I'm going to keep it at a conservative one. Okay, around this region. So I'm going to expect this move to a downside and then one more up. Okay, so depending on what's going to form here, whether is it going to start its down move or is it going to go up, you need to see what's going to form at the 50 to 618, which is around your 1.35 psychological number. Okay, so this is the 1 hour perspective. That means if you are looking for, okay, actually it's not much room because price is now at 1.351. This is 1.35. It's only 13 pips. Okay, so you realize that though on the chart it looks huge, right? But in terms of range, it's very small, right? So dollar Sing don't really move much. Alright. So when you see this, when you see this sideways consolidation, okay, going to lower time frame, that's where you see a lot M&W 88.6. Okay, so you can see this forming. Okay, so this one here is pretty deep. Okay, so based on harmonic patterns, all right, if you are familiar with this, this move here actually crosses the 786, if I'm not wrong. Yep. Okay, so I'll zoom in a little bit. You can see that price actually touched 786, right? So based on harmonic patterns, okay, so for those who are not familiar, all right, we'll have a recap session on patterns. Okay, so you all will get to know a little bit more about harmonic pattern, right? So if this touch 786, the target, or I would say the D zone, okay, so it looks like that. You're gonna aim for is actually 127, all right? So this is the area. Okay, so if you're looking at patterns, all right, because it's in a sideways consolidation, then this is the level you want to look for a completion. This is called a butterfly. All right. Of course, the other way you look at is you look at this as the whole move. All right, and then of course, then you get around the 50 to 618. Then you will get the 88.6. All right, so let me bring in those levels for you. Okay, so just to not confuse you, I remove all those and keep the end level only. All right, so the other way to look at it is this. Okay, let me change to maybe red in color. Right, so you get two confluence around this region. Okay, one is at 1.3526, one is a 28. Right, so it's actually 2 pips differently. Right, so this is of course very small time frame. This is on the 15-minute time frame. Okay, so this is the analysis you can see from daily. Okay, this is the expectation for daily. Okay, but if you go to 4 hour, you can see this is a correction, so you expect one more move to the downside first. Okay, so which means that you expect one more move to the downside, maybe very close to this, and then you can start going up again. Okay, on the 1 hour, okay, you can also see that the bias is still one more move to the downside. Whether this is gonna break all the way or from here it's gonna start rotating to the upside. Okay, we need to see what price is gonna do here. Okay, so in terms of 15 minutes, then this is the two areas, these are the two levels which form an area that you can potentially look for a short setup. Okay, so I'll drop all these charts on the group as well. Okay, so this is the analysis on dollar Sing. Okay, if you ask me, dollar Sing, not much in terms of trading because it's actually very dependent on the dollar. All right, so if you're trading the dollar Sing, then it's very dependent on the dollar. You might as well trade on the dollar index itself. Okay, and of course, dollar Sing itself is Sing dollar is basically pretty much controlled with in a band. All right, so not much volatility, not much room movement for you to trade. Right, you can see from the top to the bottom is only 8%. Right, it's not huge. But if you go over to, let's say, some other pairs, maybe dollar index might give you a bigger movement. Right, you can see 12.45% from the top to the bottom, right? So the other pairs are definitely giving you more opportunity in terms of the room for you to take profit on. Okay, any other? Sorry, I think I pressed the wrong button. Oh, for online shopping. Okay, any other pairs or questions that you guys have? All good. All right, so all good. We'll end the webinar over here. Okay. Moving forward, we might do more webinar instead of the physical meetup only. Okay. So if you have any like feedback or anything that you wish to be included in this webinar, let us know as well. Then I'll look at how we can incorporate those as well. Right. So with that, take note again. Reminder for all. Thursday is a huge major news day. So if you are trading on that day, take note of all your risk exposure, in particular to all the currency, because the central banks is having their releases one after another. Okay, so just take note of how when you're trading currencies, you are in pairs. So you might need to take note of those elements as well. Okay, so with that, we'll end the webinar tonight over here. If you have any questions, follow up on the WhatsApp group and Facebook group. All right, see you guys.